What to do in the new year? It's a new year, of course, and the world's largest brokerage houses are realigning their strategies. So CLSA has come out with a note. They do not expect 2018 to deliver returns that can match up to the year gone by. Hardly a surprise, honestly. But they expect some fundamentals to catch up and is pricing in a meaningful earnings recovery. Again, not a surprise. They are also pricing in a peaking out of NPAs. Darshan is standing by with CLSA's favorite themes for the year ahead. And what are they betting on? And Darshan, that's precisely the question. What are they betting on? I think they came out with a list of some top 12 stocks as well.
12 stocks, 9 on the long side and 3 on the short side. That are the stocks that they are recommending for 2018. Overall, they're not too bullish on the Nifty as such, but they see a 4 to 5% up move that will come in. But it's very, very stock specific. So what's in store? This is the CLSA view. First of all, they're saying that they expect earnings improvement to be meaningful this year. We've come out of demonetization and GST. The fundraising and bank recap should aid recovery, according to CLSA. The third point that they're putting out is that the fiscal concerns and politics are the key risks that they believe in 2018. Apart from it, they are saying that housing recovery and NPL, so banking as well as non-bank, as well as housing finance companies and real estates, is something that they believe could be the big traction. And the target is 11,400 on the Nifty. For the full year, they expect a 10% return. But what is more interesting is the stocks that they have picked up, almost 9 on the long side. So Crompton Consumer, the target price that they've given is 310. The upside they believe is 14%. They see meaningful growth that will come in at an EPS at a P of 32 times. They are believing that the valuation is justified. They are saying there's growth earnings as well as the housing recovery. That is why they like Crompton Consumer. The next stock that they like is Godrej Properties. They see a 26% upside in Godrej Property. Housing and real estate as a play is something that CLSA is extremely bullish on, and that's the reason that they are saying that there will be consolidation post RERA they are coming in, and they see a 50% CAGR over the next 2 years for Godrej Properties. The next stock that they are bullish on is HDFC. 1900 is the target, 12%. So as housing finance theme is something that they like and they have always repeated, and it's the best play on the housing market recovery. And at 15 times EPS, they believe that the mortgage business is valuable. The next stock that they like on the long side is ICICI Bank. This is their top pick in the banking space. A 22% upside is something that they believe is potentially possible for ICICI Bank, and they believe that the NPL cycle is peaking out and the resolution process will help. So that's the theme that they are looking at. Valuation they believe is attractive. The next on the long side is IndusInd Bank. So banks feature a lot. 26% potential upside for IndusInd Bank by CLSA. The reason that they say IndusInd Bank is the fact that it's among the fastest and most stable growth profile. It's not cheap, but the valuation they believe at 4.3 times is justified. It's no longer cheap. L&T, 21% potential upside by CLSA. The reasons that they give on L&T is the fact that infra push, especially in roads and urban, and real estate, which they are bullish on, and that L&T will benefit because of that. The next stocks that they speak about is Lupin, 17% upside, pretty much the only pharma name that they like at this point of time. They're saying that valuations are at distressed level, and they're saying that the early resolution of the US FDA issues because of the warning letter may lead to a re-rating for the company. The next stock that they speak about, M&M, 20% potential upside by CLSA. They're saying beneficiary of the rural pickup and one of the cheapest consumption plays according to them. The next one that they speak about is NTPC, 16% upside on NTPC, pretty much the only power name. They're saying project commercialization to drive earning growth, and valuations are attractive despite the fact that they have a lower ROE. The next stock that they speak about is, and these are the 3 cells that they have, Shriram Transport, a 31% potential downside is something that they're looking at, and the reason that they're giving is that the rising bond yields are negative for the company. The next stock that they are negative on is Colgate, 7% downside. The valuations are extremely expensive according to them and unfavorable at 39 times. And the last one is HPCL, pretty much at the same level that their target is, because the counter has been rather weak, builds in excessive optimism around the open offer with ONGC. So that these are the top 12 stocks that CLSA has been speaking about for 2018.
Thanks a lot for that, Darshan. That's an interesting set of names. And I just have a couple of points out here to make. One point actually, and that's on consumers. And if you scan the sell side, there are enough and more people who will come and say that what is it that some of these guys are smoking. I mean, it's one thing to justify a 25 times, even a 30 times 2-year forward earnings. And I think CLSA has gone with 32 times 1 year forward for Crompton Greaves Consumer. But the last 2 weeks, I've seen portfolio managers come and ask me that, why don't you grill some of these sell side analysts when they're giving out notes saying that they are justifying 50x FY20 multiples on a couple of consumer names. I got the snapshot of a note as well. I just can't remember the stock. I think it was a local brokerage which put out this note saying that we are giving this target price to a stock based on 50 times FY20 earnings. And people are questioning this excessive optimism on stocks continuing well into FY20. FY19, 50 times, you'll probably still agree. There'll be a clutch of names still doing that. But FY20, 50 times sounded slightly stretched. And I think that, which is why CLSA's note on Colgate, they're saying 39 times for Colgate is expensive. You probably buy that argument.
There was a Goldman note on Avenue which had rated it on at 28 times. So I think anything they're trying to justify valuation.
I saw a note this morning on Tanishq, Titan, which said, I think now I suspect people are just scrambling for reasons to buy stocks because they can't seem to find any new stocks to buy into. So one of the rationales was that they're going to be able to open more stores than we had anticipated, and that will lead to economies of scale or something like that. And I thought that was rather vague. I mean, those can't be the reasons now that you're ascribing to why you're going to start buying stocks. So, but like you said, maybe they're just running out of names.
Yeah, and I mean, it's just interesting.
It's becoming a narrow and narrow market.
It is becoming.
Yeah,
but
that really is the key takeaway.
Which brings me to one more point. Sorry, just one.
I mean, even all of these picks, not a single name in that is surprising in any fashion.
Yeah, not surprising. Yes, true.
Except for NDPC, maybe.
Coming out of the woods, maybe.
Yeah.
Well, let's wait.